Good morning. Hope you guys are doing all right and coming to you again this week. As I've stated before, we tape the PPP Excel workbook tune-up on Thursdays. So what I'm giving you today is what we have as far as current information is for this week. We did get some new guidance issued this week from both the IRS and the SBA. So I'll be going over that. I hope everybody's doing very good and is finding time to read all of this new documentation and information that the IRS and SBA is providing to us. So on Monday, the IRS issued IRS Notice 2021-20, and it is an update for the employee retention credit for the 2020 employee retention credit. And I'll get into that in just a minute. Again, just a real quick plug for the PPP Excel workbook. It's version 2.0 currently. It is updated. The new IRS notice does not affect the current version of the PPP Excel workbook because we have already addressed what the notice is essentially saying. We weren't using a Ouija board to figure that out, but we were able to pretty much assume what some of the issues would be with respect to PPP forgiveness as it relates to the ERC, and we just happened to get that right. So I'll go into that in a little more detail, maybe towards about halfway through this program. Also, I want to mention here that the Employee Retention Credit Guide, Alan Gassman's group actually published a hard copy, which is awesome, and now they got to redo it because of the fact that the Employee Retention Credit rules changed a little bit with respect to 2020's Employee Retention Credit. So we'll be seeing another hard copy. You can get it. You can download an electronic version. It's still really, really good. If you buy it, you're going to automatically get an update for any changes made to it. It'll push just like it does with the PPP Excel workbook. So you don't have to worry about buying it twice or paying for it twice. It's a really good guide. So the IRS Notice 2021-20 gives us more guidance. It's a notice now, not just an FAQ that the IRS published before. I have a link built into the slide deck that you'll be getting via email of the PowerPoint slideshow that takes you directly to the IRS's publications so you can read it. It's about 102 pages long. Don't be overwhelmed by it. It's really not that hard of a read because there's going to be some things in there that get a little detailed or esoteric that don't apply to you. So if you've got a specific circumstance, your best place to go right now is this notice. If it's not addressed in the notice, then you're a little bit on your own until the IRS issues more guidance. And I'll mention some observations about that in a few more minutes. Remember that this notice only addresses the 2020 ERC. It does not address the 2021 ERC. The notice specifically says that the IRS will address the 2021 ERC in a future publication. So here we are, March 4th. I'm taping this as of March 4th. You're watching it on March 6th. And our first quarter 2021 is almost over, and we have really no official guidance yet for the ERC for 2021. We obviously know what the rules are, but there's a lot of questions that remain unanswered with respect to 2021. But again, we're going to focus on 2020. The purpose of this webinar is to focus on Section I of the notice. It's the interaction with the Paycheck Protection Program loan program. So that's what we're going to focus on primarily here today. I will kind of quickly go over a couple highlights that are in the notice. They might apply to you, they might not. The notice does address that the election not to take certain wages into account and in coordination with PPP the notice does address this. It does address that the employer can make an election not to take certain wages into account for the purposes of Section 2301 of the CARES Act. That's great news, but I'm going to get into this election issue a little bit further in the webinar, and you're going to find that we have some problems there. They did confirm that self-employed people are not eligible for the employee retention credit on their own self-employment income. I've gotten a lot of questions about that, so I wanted to emphasize. Now, if you're a self-employed individual that has employees and you pay them wages and file payroll tax returns, you can still qualify for the employer retention credit as a self-employed individual because you're the employer. You just can't qualify for yourself. Household employers do not qualify. They're not eligible for the ERC either. I've been asked that a few times. The notice gives us some aggregation rules guidance, so there's examples in there for that. So if you are a group of companies or you have a group of related companies, go to those aggregation rules that are or guidance that's in the notice, because that'll probably help you as well. The notice does go into some good detail on governmental shutdown orders for both partial and full shutdown orders. There's about 12 Q&As on that topic alone. They're pretty good. So if you've got issues there, I might address that particular issue in next week's webinar. Again, depending on what kind of guidance we get, we kind of set the tone of these each week based on what information we're getting from the IRS and what we're getting from the SBA, as well as the emails that I get from everybody. So it helps us decide exactly what to put in each week's webinar. The one good piece of information, at least I think it's good information, that the IRS provided to us was they defined nominal for us. If you notice, or if you recall, if you've watched prior webinars, we've talked about the fact that if you're subject to a partial or full shutdown order, the IRS's guidance is that that order had to actually have a nominal effect on your operations. So they finally defined nominal. It doesn't necessarily mean that you have to meet this. This is not a bright line test. This is more of a guidance, if you will. At least it's probably more of a safe harbor. So the IRS has defined nominal to mean that it's a portion of your business operations, whether it's a division or your entire business, that represents 10% or more of your gross receipts, or represents 10% or more of the total hours performed within that business operation compared to the same quarter in 2019. So let's say that your business was subject to a partial shutdown order from April 3rd to May 4th. So that's roughly 1 month. If your business showed a 10% decline in revenue and gross receipts, or a 10% decline in the hours of service your employees could perform in the business during that period of time, pretty much by default now, you do qualify for the partial or full shutdown order. Now, if your business remained operational and you really saw no decline or a smaller decline than 10%, you're in a little bit of a gray area and you might not qualify. And I'll talk about that in a minute too. The whole concept of partial and full shutdown orders is really going to be a challenge, because we're finding even in our jurisdiction, we're in Florida. Florida wasn't shut down very much at all compared to other states. We're pretty much fully open now with respect to the state as a whole. Now there's some areas that are still shut down, but then you have to kind of look at the specific areas. We live in a city, we have a county. You have to really delve into what the orders were for each one of the different jurisdictions, if you will. So it's not as easy as I thought it would be. I'm surprised how many people I've asked, were you subject to a shutdown order, either partial or full? And the response is, well, I really don't know if I was. I know I shut down for a period of time, or I had to shut down, but I really don't know the dates. I don't know the order number. Because if you think back to the spring and early summer of 2020, we were all just kind of like going day by day there and doing the best we can. So now we got to probably dig a little bit deeper to make sure we've got the right documentation for a shutdown order. The notice does confirm that a voluntary suspension of business due to COVID-19 doesn't constitute a partial or full shutdown. So if you chose to shut your business down, but you weren't required to shut your business down or partially shut it down, you don't qualify. So that's really important that they've distinguished that for us. They've also helped us and given us instructions to indicate that if an employer was able to continue to operate their business comparable to its operation prior to the closure, they won't qualify for the ERC. And they do provide some factors on determining that. So such things as employees' ability to work remotely and things of that nature. We're a CPA firm. A lot of our employees went remotely early on in the process. We were classified as essential, so we never had to close down. So, and our operations remained comparable for at least a little while after the pandemic hit, things kind of got a little bit back to as close as we can call normal, I guess. The notice also addresses how you claim the employee retention credit. We talked about that a little bit previously. I'm not going to go into too much detail on that today. It's pretty straightforward, quite frankly. They also, in the notice, specify, and I'll talk about this again a little bit later, that the deduction for the applicable wages for the current tax year, that's the taxable year in which the wages were paid, must be reduced by the amount equal to the sum of the employee retention credit. I've had a lot of people tell me, if I apply for the employee retention credit in 2021 for 2020 on an amended payroll tax return, do I have to also make that adjustment on my 2020 tax return? I think the answer to that is yes, and I'll go into a little more detail why I think that's true. The IRS does not want you to apply for the credit in 2021 for 2020 on an amended payroll return and then pick that up as, say, income in 2021, because there's no mechanism for reporting the credit as income when you receive it. You have to reduce the deduction for wages. That it clearly means that we either have to file extensions for business tax returns so that we can properly calculate the employee retention credit, or we're going to have to file business tax returns and go back and amend them later. And if you're a CPA or an accountant watching this, you know those words are not good words, because it's a lot of work to amend tax returns, especially tax returns for pass-through entities. So we're going to dive right into Section I, which is the interaction with the Paycheck Protection Program loans. And here's where we get some guidance, both probably good and bad in a way. But the notice is telling us that an employer is deemed to make the election to count qualified ERC wages as wages for the PPP forgiveness for those qualified wages that they included in the amount reported as payroll costs on their PPP forgiveness. So on the face, that makes a lot of sense. It's kind of common sense, quite frankly. The IRS doesn't want you to double dip. We know that, you can't do that. It gets a little bit challenging as we go deeper into the notice. It does specify also that the amount of wages counted are those sufficient to support the amount of the PPP that is forgiven. I think that's also a very important phrase that's in the notice that we'll talk about in a minute also. The employee retention credit does not apply to qualified wages for the election where the election or the deemed election is made. And there's a really big word there, and that's deemed election, because I think that's where we're getting in, we're going to get into some trouble possibly. So what happens is that with respect to the employee retention credit, if an employer has already submitted a forgiveness application, even if it was before the passage of the Taxpayer Certainty and Disaster Tax Relief Act, which was the part of the total consolidated appropriations bill that was signed by President Trump on December 27th, 2020, even if they submitted the application before that date, and that date is the date that made the employee retention credit available to PPP borrowers, the employer and the employer has received a decision from the SBA on the forgiveness, the employer is therefore deemed to have made the election to count whatever wages it reported on the PPP forgiveness that it needed for PPP forgiveness to be wages that cannot be applied to the employer retention credit. So the real challenge here is that the employer has deemed to make the election, and the issue is that the wages might not now be available for the employee retention credit. So one question automatically comes to mind: what if the amount of wages we reported on our PPP forgiveness application is more than what we needed for the forgiveness? The answer is that you can still use the excess for the employee retention credit. So very simply, if your wages that you needed for the PPP forgiveness were $120,000, but your application reported $200,000, you could still use that $80,000 of wages that you didn't need on the PPP or didn't need for the PPP forgiveness. Now it gets a little bit tricky, and we'll get into some of the examples just really briefly. We could spend hours on this alone, but the real issue becomes, what if the employer reported only wages and no other qualified PPP expenditures on their forgiveness application? You know, if we turn back the clock, if you remember, the PPP loan originally was for 8 weeks. It's hard to believe that even was a rule at one point. And then it got stretched out to 24 weeks. So a lot of businesses, a lot of employers, when they filed for their PPP forgiveness, they said, not going to bother reporting my rent, my utilities, not even my retirement plan, not even my health insurance costs. I'm just going to report payroll, because my payroll was more than enough to cover my PPP loan. And a lot of people did that. I know a lot of people that did that. I've seen applications where that was done. The problem is that the current guidance in the notice tells us that if that's what you did, and going back to that example that I just told you, if that employer reported $200,000 of PPP wages and the PPP loan was $200,000, and they reported nothing else, no rent, no nothing, the IRS is saying they cannot use any of that $200,000 of wages that they claimed on their PPP forgiveness for the employee retention credit. Now, in the prior webinars I've been doing, I've told all the viewers that we're going to have to somehow amend those applications to correct that, so that we only use the amount of payroll that we are allowed or needed to use. Unfortunately, the IRS notice tells us, it doesn't tell us we can't do that, but the problem that we run into is that there is no mechanism for amending a PPP loan forgiveness. And I'll talk about that a little bit further. So if the employer has reported PPP expenses that cover up to 40% of the PPP loan for forgiveness, the employer can still use the excess wages for the employee retention credit. So let me go back one more time to that example. $200,000 PPP loan, the employer needs to provide at least $120,000 of wages for that, because there's that 60% test. 60% of 20,000 is 120,000. So let's say that that company reported $120,000 of payroll costs and $80,000 of non-payroll costs. They can use any wages over the 120 that they claimed on the forgiveness application. So you can see that an employer who used a full amount of $200,000 in wages on their PPP forgiveness application versus an employer that used only 120 for the same PPP loan amount, which is 200, the guy that used $200,000 in wages is technically out of luck right now. And so it really presents a challenge for us that we're going to have to somehow figure this out. The section in the notice does give us quite a few examples of computing just how the deemed election amount is determined, where there are payroll costs, health insurance, retirement plan, non-payroll costs being submitted. So you really need to look at your specific forgiveness application to figure out where you stand as far as that payroll is concerned. So in my opinion, this section of the notice is really plagued with some significant problems. Why can't an employer amend their PPP forgiveness application? Because technically there isn't a mechanism for amending it, but the SBA has rules for reviewing it and even rules for auditing it or examining it in the future. Certainly, if there is the ability for the SBA to come back and review your application and possibly make changes in a future date, why can't the PPP borrower make an amendment to their application as well? This is a question that I posed to the SBA. I haven't gotten an answer back. I'm hoping to get some feedback from the SBA on this, or I'm hoping that maybe the SBA realizes that this is really unfair and they're going to have to somehow address that in their system. How can an employer have made a deemed election when the law didn't even exist when they filed for forgiveness? So let's say that you filed for forgiveness in November or December, before December 27th, 2020. You didn't even know at that point that the employee retention credit was going to be available to you for 2020. You would have had no reason not to go maybe the easier route and provide only payroll for your PPP loan forgiveness. Why not make your life easier? Why not make your lender's life a little easier? Less documentation you have to upload, less work for the SBA. It seemed like a win-win-win for employers to do that, and now they're being penalized. So we really have to figure out a better way to approach this. I was able to talk to the co-author of the notice this week, or one of the co-authors. Great conversation, super helpful. The main takeaway I got from this was that the IRS is really struggling with what data or what information to use to show that the employer made an election for wages to be used for the PPP forgiveness versus ERC. And before I go any further, let me clarify what that means. In the original employee retention credit rules, the rule is that you have to apply eligible wages to the ERC first, technically before the PPP. So if the company or if the employer filed for their PPP forgiveness and used wages that would have otherwise been available for the employee retention credit, had they known that the employee retention credit was available to them, then they would have had to have made an election to do that. So this is where this whole election and deemed election is coming from. So the IRS Associate General Counsel told me that right now all they have to rely on is the PPP forgiveness application. They can't really rely on anything else, and because that application has been accepted by the SBA and the loan has been forgiven, they really kind of have to go with that. I don't necessarily agree with that. I believe that fundamentally what the IRS wants, and he told me this, is that the IRS has to have some assurance that wages aren't being used for both the ERC and the PPP forgiveness. So in that circumstance, I believe there should be some form or some mechanism to allow a borrower to change their application. Now, if you're in that lane where you qualified for the ERC and you have already submitted your application, if you've gotten the forgiveness already, you're technically out of luck right now. Don't give up hope, and I'll tell you why in a second, but I will tell you this, absolutely positively do not submit a PPP forgiveness application until you have absolutely exhausted all of your employee retention credit calculations for 2020. Now, I know that means that you're probably gonna have to file an extension for your tax return, and you're gonna have to take a little bit more time to do the calculations. There are gonna be tax ramifications associated with the employer retention credit, but the amounts could be substantial. I've seen employee retention credit calculations well in excess of $100,000, $200,000, even $300,000 already, because that's how substantial this could be for some business owners. Now that'll have some income tax effect on them as well, but the bottom line is they still will come out ahead because they're getting that money refunded back to them from the IRS. If you have filed your PPP forgiveness, but it hasn't been accepted, try to cancel or claw back the application with the lender, see if that's a possibility. If you have already filed your PPP forgiveness application and you can't cancel it, request an allowance to amend it. Maybe submit a new application even on paper that's amended to reflect the new numbers. I did ask the IRS gentleman that I spoke to this week about that. I said to the Associate Chief Counsel I spoke to, what if somebody prepared a paper PPP forgiveness application, wrote across the top of it, amended, and submitted it to their lender and to the SBA? He really didn't have an answer for me on that. He directed me to talk to the SBA about that. But the fact of the matter is that, again, if we go back to what the emphasis was, and the emphasis was the IRS just needs to have some mechanism in place to assure that the PPP wages weren't also used for the ERC wages, and technically vice versa. So I think if your documentation is really good, then at least you have maybe a leg to stand on as far as that's concerned. If you've already received PPP forgiveness, that's where it really kind of gets challenging because there doesn't seem to be any option available to you right now. I would still reach out to the lender and the SBA. I did have a client who actually reached out to their lender and asked them, informed them that they need to amend their PPP forgiveness application. It had already been accepted. The lender told them, no can do. There's no mechanism for doing an amendment to their PPP loan forgiveness. If you get that answer, call your congressman or congresswoman, and I'm serious because one thing I want to point out here is that when the IRS issued notice 2020-32 last year, and if you're a CPA or an accountant, you were pulling your hair out at that time because that's the notice in which the IRS said that the expenses used for PPP forgiveness are going to be non-deductible on your tax return. Now, we all know what Congress did. Congress fixed that by making those expenses deductible and retaining the non-deductibility of the PPP loan forgiveness. So my point here is that while the IRS, I think, tries to do as good a job as they can interpreting the laws that the Congress sets, the IRS isn't always right. And I think this is a circumstance where I really feel the IRS is not right because it doesn't make sense that two employers with the exact same information, the exact same circumstances, would be treated that much differently. So let me back up real quickly and give you that example. So let's say that employer who used $200,000 for wages and reported that on their PPP forgiveness, and their PPP loan was $200,000, and they got 100% loan forgiveness. They used $200,000 of wages. If another employer did the application using non-payroll costs and other payroll costs that aren't eligible for ERC, like retirement plan contributions, if that employer used $120,000 of payroll or of qualified wages to get to the $200,000 forgiveness, that employer, if they both qualified for the ERC, this employer over here is set to possibly get a $40,000 employee retention credit because 200 minus 120 is 80. The employee retention credit is 50%. Now there's limitations on the wages. It can't go over $10,000 per employee. That's fine. I'm keeping the math very simple. But the point of the matter is why would this employer who waited to submit their application or maybe submitted it with all of that extra data is going to qualify for the credit when this employer doesn't qualify for the credit? It simply does not make sense. So don't give up hope. We have to continue to work on this to see if we can get maybe some additional guidance from the IRS or for them to realize that there has to be a different way to calculate the wages so that it stays fair. We want to keep the playing field fair to all people. People who submitted their PPP forgiveness applications already, certainly we're trying to do the right thing by getting this done and getting it submitted. And there have been millions and millions of applications submitted. And I just can't see how that could be fair to those who haven't submitted their or have submitted their applications. There just doesn't seem to be any rhyme or reason to that. So I'm hoping that the IRS will see differently with this. I'm hoping that the SBA will possibly allow for amended PPP applications to be submitted at least from employers that are qualified for the ERC. That would be the only reason to amend, I think, but you know, there hopefully will be something in place for that. If not, then your choices really are limited. You're going to be able to still get the employee retention credit for wages you didn't claim on your forgiveness application, but you'll be out of luck for wages that you did include on your forgiveness application that you didn't necessarily need to provide with the forgiveness application. So I'm going to kind of end it there. If you have any questions, please email me. We do have another webinar that was going to air at 9 a.m. before this one, so hopefully you got the notification for that one too. I'll be joining Alan and Brandon for coverage of both this notice and some other new information that came out this week. The IRS did issue an IFR on self-employed people on how they calculate their loan now. The SBA also issued updated FAQs to reflect the new law changes from December 27th, 2020. But that's it for today. Thanks for tuning in. I appreciate everybody watching this, and I appreciate the questions that I'm getting. Some of them I can't answer either because I just don't know the answer, but I certainly try to answer as many as I can. So I appreciate it. You guys take care and have a great weekend.